Welcome to the second season of Adapt, Climate Change and the Built Environment, where we interview professionals across the private and public sectors to discuss adapting the built environment to a changing climate. We believe that ensuring climate adaptation to extreme weather and evolving climate patterns needs us to re-examine what it takes to make our buildings, infrastructure, and communities resilient and adaptable, so that our society can continue to thrive for years and decades to come. And with that, let's get started. Hi, Jessica.
Hey, Monica.
I am so excited to present the last episode of our season 2.
I know. I can't believe it. We've done 2 seasons now. That's wild.
We're coming up to our 1-year anniversary of the Adapt podcast.
Yeah. A year ago at this time, December 2023, we were still putting everything together, but we hadn't yet started releasing these episodes yet. And we didn't know what the feedback would be like. We didn't know how this would turn out. And it's been such an exciting adventure.
Absolutely. And it's really because of our audience. So thank you to all of you who listen to our episodes. Give us feedback. Tell us that you're listening and you're looking forward to the following episodes. Stay tuned for season 3. It'll be coming up in 2025.
Yes, please come back and thank you for everything.
In this episode, we speak with Julie Manning. She's the Global Head of Climate and Carbon Strategy at LaSalle Investments. LaSalle Investments invests the capital of entities like pensions in real estate. We will hear from Julie on how they're taking climate risk into account.
Talking to Julie was so interesting because obviously money is always a driving force. Things don't just get built without funds. Things don't get maintained without funds. And so talking to people who are working with the investors as they try to figure out how to address the impacts of climate change is really interesting. I think we've seen for years, there's been different investors, different businesses who have focused on renewable energies or looking at reducing the carbon emissions of the built environment. Mitigation, sustainability is a much more well-developed area. And so now we're seeing investors trying to figure out okay, we still need to fight climate change. We still need to reduce carbon wherever we can, but the effects are already here. And so we have to start thinking about how do we deal with that? And investors are asking the same questions we're all asking.
That's right. There's a study that says that 7%. There's another study that says it's 9%. But anywhere between 7 and 9% of climate investments go into climate adaptation. So there's still a lot of challenges on investing and implementing climate adaptation. So it's interesting to hear Julie's perspective of what is the role that climate risk has into these investments, but also what are the challenges of the future? What else is left to do, which is a lot? What opportunities there will be in the future, especially looking at just the US in this whole new political turn that we're taking? What do we have to do in the private sector when it comes to climate adaptation?
We've talked about this before. How do investors even deal with climate adaptation and evaluating climate risk when a climate haven like Asheville, North Carolina is hit and devastated? So I'm sure this is an area that we will be coming back to, but it was really great to be able to talk to Julie about what investors are thinking about right now.
Well, let's get to our conversation and we will see you in season 3. Hi, Julie. It's wonderful to have you today.
Wonderful to be with you both. Thank you.
Can you tell us a little bit about your background and how you got into where you're now?
Sure. I have been in the real estate investment management industry my entire career. I started actually out of school as an accountant. I majored in accounting, got my CPA. And what I really loved about that was different from other subjects in school. There were right answers and there were wrong answers and very little gray. And when I look back and think about that time, I think, boy, did I do a full 180 on that, given the job I'm in today is nothing but. I've been with LaSalle for over 27 years. Most of my career at LaSalle, I've been a portfolio manager in our North America business as a separate account manager, and also before that as a global fund of funds manager. In the last couple of years, I've started getting a little bit more involved in our climate risk work. I think we had a climate risk task force that we formed back in, 2020, 2021 timeframe before I got involved. It turned out where I initially was on that task force as a side job to my day job, And that side job started taking more time and more time, to the point where I said, okay, guys, we need to make this a full-time job. And they said, okay, that makes sense. Do you want to do it? And as much as I loved my current job, it was a tough choice, but I decided to do it. No one had done it before. I wanted a new adventure, and I sure got it. So I was focused on climate risk for about a full year or so before our global head of sustainability retired, and I took over that role back about a year ago. So I am now in charge of our global sustainability efforts more broadly, as well as our climate risk efforts as well.
I can understand stepping into a new role, right? When it's literally a new role that you have to create can be both exciting and obviously very challenging. So even what do you get to do? What do you have to look at? And now it sounds like you're handling both sustainability and the climate risk. So, which obviously they're all in climate change, but there's so many different kind of aspects of climate change that we can focus on. So how do you balance those two things, and what is the scope of your work these days?
I'll start by describing LaSalle a little bit first. I think just to give context, LaSalle's an investment management company, and we invest only in real estate. So we have $84.6 billion of assets under management around the world, representing about 1,200 assets. When we call it an asset, sometimes an asset is multiple buildings. That number is a little bit fuzzy, but to give you some sense of how many buildings we're talking about around the world. Most of our investments are in existing standing assets versus we do some development, but it is not the majority of what we do. A lot of our clients, most of our clients, are government and corporate pension plans whose mandate it is to deliver retirement benefits to their beneficiaries. So we are stewards of their capital, and we have a fiduciary responsibility to invest that capital and return investment returns on that capital. So it's not our money, and our number one goal is to drive investment performance, to drive returns. It's important for us to ensure that we're staying ahead of secular and cyclical trends as much as possible to deliver those returns. And the framework we've been using for a long time at LaSalle is DTUE, which stands for demographics, technology, urbanization, and the E is environment. And so we've been focused on environment for quite some time. Our work there continues to grow and expand and deepen over time as our expertise and our team and our focus on the environment has really grown quite a bit over the last several years. I think what we're finding is, political wins aside, I think we all know that our world is transitioning to a decarbonized economy. And as an investor, you can't ignore that. And you need to be aware of what risks that brings to where you're investing. And you also, frankly, need to be aware of where the opportunities are. And so it's something we're paying really close attention to. How you balance between, if you think about climate, if you separate it into risk or climate mitigation, where you're actually looking to reduce the amount of emissions you're adding to the environment, versus the other side being climate adaptation, meaning how you're adapting to what's already happening in the environment with the increase in frequency and intensity of storms and climate events. We have to pay attention to both. The balance between the two is an interesting question because I think both are quite important. I heard recently a number, I was listening to the Bloomberg Zero podcast, and they quoted some numbers that were really fascinating. One was, look, if we know how to decarbonize the world, we know how to do that, and we can do that for between $3 to $5 trillion. Which sounds like a lot of money, for sure, no doubt. I certainly have none of that. But the other number that was even more interesting compared to 3 to 5 trillion is the amount of money we need to adapt to the climate that we're coming into is hundreds of trillions of dollars. So boy, it costs us a lot more to adapt than it does to mitigate. So you could take the stance of we should spend our time mitigating so that we can avoid that adaptation money, of course, and we should be doing that. In the meantime, we're already beyond the point of no return to some degree, and we're seeing these climate events happening. So we need to be really conscious about how we're adapting to today's environment, much less the environment of the future. And so it's important that we're focused on both.
So can I just ask one follow-up question related to that? So when you say of the various things you focus on, one is environment. Environment obviously can be defined different ways. There's political environment, there's like the actual kind of green environment. So are you looking at, as part of your investment portfolio, when you're looking at environment, are you saying we're looking at areas that we think we've learned from Hurricane Helene that climate havens is a misnomer, right? You should never think that you're going to be immune from all the effects of climate change, but are you looking at areas that maybe are lower risk, or at least in the near future have lower risk? For example, like my great state of Wisconsin, as opposed to, say, a Florida or a Texas? Or is there something else you mean when you say you're looking at the environment?
All of that, for sure. I think we can talk about climate migration too. And in the real estate industry where we're investing, we're paying a lot of attention to, when we're doing market analysis, we're paying attention to demographics. Where are the people? Where do they want to be? Where do they want to go? And I think we've seen to this point, well, I think we know climate migration is a really hard thing to define. But even when you do look at it, to this point, we've seen climate migration being more within a local community or area or metropolitan area rather than across hundreds of miles. Will that bigger climate migration happen from Florida to back to Wisconsin? I don't know, but it is something we are certainly keeping an eye on. I think the North Carolina experience with Hurricane Helene, yeah, I think that really was eye-opening for a lot of us to say nowhere is safe. I think you have to be conscious of what could happen in your particular area. Maybe in Wisconsin, you have a river that you need to be conscious of. Maybe extreme heat's going to be a problem when you're looking at some of your local infrastructure that wasn't built for such a hot environment. So those are the things communities really need to be thinking about.
As fiduciaries, you aim to manage effectively the investments. Can you get a little bit into more detail on how is climate change incorporated in that management process?
We did write a paper with ULI that we released earlier this year on that topic. And what we found with ULI's help is we're a part of a broader industry of investment managers who are just beginning to get our arms around this. And what we detailed in the paper were what they found as leading investors, what they're really focused on. And I would articulate it along the lines of our investment process. So one of the things we're trying to do is really embed sustainability, including climate risk, into all areas of our business. And when I think about our investment process, it starts with market evaluation. It moves on into our acquisition process. Once we've bought a property, it moves on into our asset management process, and then ultimately into our overall portfolio management process. And I think we have embedded climate risk analysis into all of those steps in various ways. And not to say it's the only way to do it, but that's how we've done it. So when we think about market analysis, what we're looking at, firstly, before I even get there, we do employ third-party data service providers to help us evaluate the risks in any location. And we did another paper with ULI a couple of years ago that actually talked about how to select that data and what to be wary of and what to be looking for and how that data works with you and your business. And I think one of the things we learned is no matter who your data provider is or what data you have or what the metrics are that they're delivering to you, you should be taking that data with a big grain of salt. Don't take it at face value, but use it as a directional tool to point an arrow for you at what you might need to be looking into more deeply. And so that's really what we've been doing. For example, I will say back to Asheville, I think our data told us there was a 0% chance of flood risk for our location, frankly, which was not right on the river, but still, I think we back checked it, and sure enough, I think we would have still had close to zero if we were even closer to the river. So you can't take it at face value. The acquisition process is really where we have our chance to really make a meaningful decision. So for example, if we are looking at a potential deal in a potential location and our data tells us, oh boy, you've got elevated risk in flood, or you have elevated risk in hurricane, which is a lot of what we end up getting is either wind or water tend to be the more impactful events. that flags to our team, you need to spend a little time and dig deeper on that and take a look at whether, first of all, was that evaluation correct? I would say an extreme example of where it's not correct is Amsterdam. We've historically had data that tells us that our assets in Amsterdam have 100% chance of being underwater in the next 50 years. We know that Amsterdam has been building flood defenses for hundreds of years and will continue to do so. We actually discounted that risk quite substantially and said, actually, we think the risk is well mitigated here, and anything that's maybe not mitigated, we're willing to tolerate. And so we made that judgment call based on what we know about the area, the resilience measures, and moved forward to invest in Amsterdam. But on the flip side, the data does highlight risks that maybe we didn't think about. And so there have been deals where we've received data that made us scratch our heads a little and ask more questions. And at the end of the day, usually not the sole reason, but sometimes climate risk can be a meaningful reason for not pursuing a deal or passing on a deal. And so we have examples of that where, for example, in Florida is always the state we all talk about, but we were looking at an apartment community in Florida. There were some 30 some odd 2 or 3 stories buildings where half of them were built in a flood zone that had recently been updated since the complex was originally built. And so if those buildings needed to be rebuilt, they would need to be rebuilt about 1.5 feet higher than where they stood today. That's a big risk. And when we looked at it deeper, asked more questions, looked at underwriting, whether it was the capital improvements we may need to mitigate it, if there were any, or if not, maybe just adjust our risk numbers in our underwriting, those returns didn't pencil for us. So we did pass on that deal. And there are other examples, but that's how we're thinking about climate risk as an investor. As an investor who's looking to drive return, we have to be conscious of where those risks lie.
Just to clarify, when you were talking earlier and referencing a paper, you were referencing data providers or data sets. Is that like climate modeling? Is that what you're talking about?
Yes, exactly.
Okay, and we will link to that article. It is an issue that Mónika and I have talked about, and Doug Parsons on America Adapts has a whole episode on the Wild West of climate modeling about, yes, it's this very important service. Yes, we have amazing data sets, but it's a new kind of area. And so it is still challenging. I love that you guys had that article that walked through the different kind of considerations and how to approach this. Also, speaking of your articles, you also referenced the newer article that you did with ULI about doing the underwriting, which is really what the analysis of the risk for the physical climate risks. We'll also link to that. And I just wanted to give that a shout out because it actually has a flow chart to walk through, which I just love a flow chart, right? If it seems like it's very overwhelming, obviously there's a lot that goes behind this flow chart, but it does show. And for me, it's one of the issues we talk about is one of the biggest steps is just an awareness of the fact that you need to be thinking about these things, right? That you can't just say, this building's been here, it's been fine for however many years, so I don't need to think about it beyond that. So I appreciate those issues that you're looking at and looking at more of the forward looking risks, obviously, which is what climate change is forcing all of us to do.
I have an additional comment on the climate data. I always say that future climate data is not perfect, but is necessary. Julie, you alluded to the fact that some climate data is really more of hazard data, right? But it doesn't incorporate vulnerability or any resilience measures at the building level or at the community level. So what you guys were doing in Amsterdam was incorporating the resilience measures that you knew of, right? So you're looking at just not hazard, but also the vulnerability, the exposure of the assets, the adaptive capacity, right? That a building, I would assume that you guys are looking at what is this building used for? Can it adapt quickly? Can it not? So there's so many aspects that have to be evaluated when looking at assets or portfolios.
Yeah, you're absolutely right. It's really important. And the resilience aspect is something that it's really the next step. The first step of identifying the risk or the hazard that you're at risk of experiencing. But then what? Can this building be more resilient? I think one of the examples I like to share is the idea, imagine a tall glassy tower. And that tall glassy tower is, let's say it's perfectly 100% resilient to any kind of flood event because it's perfectly built. This is this ideal example. But imagine a flood comes through. The tower is completely safe. No water is getting in. That's great. But there's water all around the tower. There's no way of people gaining access to the tower or being able to leave the tower. If that tower were an office building and that office building had, for example, tenants who are financial or legal industry tenants who are all capable of working from home for a few days, we're fine, no problem. But what if that tower were an apartment building and people were living in that building and they needed access to food or emergency services? Now we've got a problem. And so thinking about that's where it gets a little bit scarier for us as investors is we also need to be thoughtful of what does the resilience look like for the community around that building? What does the infrastructure look like? How resilient is the building in the community in the face of those events? How resilient is the community after the event happens during recovery? Those are questions that are really hard to answer. And those unknowns are I guess unknowns tend to be scary, right? And so those are the unknowns that are scariest to me right now as an investor in some of these buildings is we don't have a great system from an investor perspective to point to and say, hey, I'm looking at investing in community XYZ. What is your resilience plan? How are you funding it? How are you implementing it? What's your timeline? Some communities have that, some don't. And even the ones that have plans maybe not executing that. From our perspective, where we're investing all around the world, we don't have the resources and time to really investigate every single community resilience plan. And so I think there's an opportunity out there for somebody to help us to do that. And I don't know what that looks like yet.
That was one other follow-up question I had, speaking of Amsterdam. When we talk about resilience in buildings and communities, there's also that both political history and political will to address the climate change issues, right? So I do think that's interesting that you look at Amsterdam, and yes, by all logic, nobody should be investing in Amsterdam, except for the fact that both they have a history, and I guess that's tied into kind of a verifiable dedication to work on resiliency and to find a way to adapt. Yeah, it sounds like you can't necessarily do that in every community, but that does go into your investment considerations as well. The extent to which some communities do have more of a track record of actually saying this is an issue that we're going to tackle and work on.
Yeah, if we had that information, it would be very welcome. We don't always have perfect information, and investing in opaque environments is where you have both risk and opportunities, and that's what we're hired to do is to evaluate what we can evaluate and use our judgment and make good decisions. That is one area where we'd love to have more clarity.
So it wouldn't be efficient for you to evaluate every single community when I'm sure other investors also want to evaluate the community and not just the resilience plans or adaptation plans, but also are they being implemented, as you mentioned, right? There's one thing is to plan it, and then another one, the implementation is hard, not impossible, but it's hard. Do you see resilience measures being implemented at the individual level? So moving on from like the community resilience to the asset level?
Yeah, I think where we have seen experiences is primarily flood and wind. And for example, when we're looking at buildings in hurricane-prone areas, we know what we're looking for there. We're looking for specific physical structures that I'm going to get a little out over my skis on and channel my due diligence team who tell me all about roof tie downs that make sure that the roof won't fly off the building. Make sure we have the right operational procedures, frankly, in place so that we're sure to keep our occupants safe, but also our building as well. These are things that are really, important for us. And we know when we're investing in Florida, for example, we know what we're looking for there. I think the buildings that don't have those features are probably buildings be less likely to invest. When I say invest in. There are other buildings, though, especially where there's flood risk, where we can do some work. And we've had some examples where we have a building in Houston that we've owned for a long time. And when we evaluated the climate risk on that building and noticed we looked at the lower levels of the building are primarily parking garages. We're looking at what equipment are on those lower levels that we should be thinking about raising up. We've looked at investing in deployable floodgates for the building. So there are strategies that we've deployed, and I think those are really important for us. I think the other key consideration for us is we don't know all of it. I think we are like anyone else, we need to be finding the resources that are out there that'll help us to evaluate what are the right mitigants for the right building. So I think of buildings very much as snowflakes, right? So every building is very unique in its own right, and it's also in its own unique location. And so while my team, my colleagues are always asking what are the rules of thumb I should be looking out for, it's really hard to tell them what to look for. So any resources we're able to find to help us do that, we're always looking for. But I think in the absence of that, we're having to think about, okay, is this something we're willing to spend some money on and hire some engineers or architects to help us with the physical aspects of the building and understand where might we look at investing in hardening strategies and what does that look like? Gratefully, frankly, we haven't had to do a lot of that in our portfolio. A lot of our buildings are in less exposed locations for the most part, but we certainly have some. And so we have had to do that on a handful or more than a handful of buildings.
And looking like at your portfolio and going through this process over the past, I know it's really only been a few years that you've been both in the sustainability role and in this new role. Are there trends or like resources that are available in different areas of the world, right? We talk sometimes about, certainly on the sustainability front, the EU is often ahead of the US when it comes to even like concrete, my favorite topic. I think there's a lot more work in the EU on how to mitigate the carbon emissions from concrete. Do you see anything like that when you're looking at either the resiliency measures that are in place, either in a building or in a community, or the resources that are available? Have you been able to pick out any trends, or is it still very community specific?
Yeah, yes and yes. So firstly, Europe does seem to be leading the charge on climate mitigation. The momentum there has really moved us as an industry in the built environment quite far, which is great. The physical climate risk, the adaptation to that climate risk, I would say is actually less of a concern in Europe, at least in our experience, than it is in the US and parts of Asia. Europe certainly has some river flood risk that they're having to focus on in certain locations, but it's something they've been doing a long time already anyway. When I talk about physical climate risk in my European business, I get a lot of shrugs. Yeah, that's important. We'll look at that. But frankly, we're focused on decarbonization. In Asia, I would specifically point to, we have a pretty large business in Japan. Japan is exposed to not only the physical climate risks we're all talking about, the hurricanes and sea level rise, but also earthquake. And they've had a lot of experience and a lot of time to figure those things out. So yeah, I think we can be learning a lot from them. In terms of resources, certainly part of my job being in a global role is to ensure that we're learning from each other across the organization, across the globe, as much as I can, sharing what our teams in Japan are doing with our teams in the US, certainly doing that. But within the industry, I think reports like we've done with ULI, certainly others have done other reports that I think are in papers that are really helpful. We were just looking at another report ULI put out with one of our competitors on insurance. And I think that's a phenomenal paper too. I would recommend that one too. But I'm always looking for more resources. So
we'll make sure to put a link to the ULI report on insurance as well. And it sounds like you guys are collaborating already and making sure this information is available to the market. To close the episode, I have a question that we ask most of our guests. What advice do you have for other players in the real estate sector?
Yeah, I'd say two things. First, I mentioned earlier, buildings are snowflakes. It's a challenge to drive any kind of efficiency at any scale profitably with respect to resilience at a building. I think it's hard, and every single building we need to evaluate separately. I don't have any ideas on this, but I would offer there's an opportunity here for anyone who has a really innovative idea for how we could address adaptation at scale. That would be something I'd be really interested to talk about. The other thing I'd say is community resilience is so important. We talked about it earlier, why it's important, but I think any way we can collaborate as an industry to pull together to understand how communities are planning to be more resilient or could be more resilient. I'd love to participate in that. I don't think we can lead that given how many communities we're invested in around the world. But it's something I think that we have an opportunity as an industry to do better at.
Yeah, this all makes a lot of sense. And I think that buildings are so unique. When you say that buildings are snowflakes, it's because people are unique, right? Their occupants are unique, and how we react to hazards, even though we try to standardize the way that we do things, communities are unique as well. It all makes sense. And I hope those organizations that are producing reports and studying communities and figuring out how we move forward to make a more resilient world are listening. With that, thank you so much, Julie, for speaking with us today. It is fantastic to hear the perspective of an investor and investment manager on our podcast. I'm sure this will benefit our audience.
It was
Yes.
great to speak with you. Thank you.
Thank you. You're the final episode of our season 2. And I think you're really emphasizing a lot of the messages that we've been talking about this season. So I do feel like this is a perfect way to end our season. Thank you so much for taking the time. Thanks for listening to Adapt: Climate Change and the Built Environment. We hope you enjoyed this episode and come back to hear more of our conversations with people leading the way and addressing the issues facing the built environment as our climate changes. Please rate, review, and subscribe, and share our podcast with others who may be interested. And if you have any feedback or suggestions for topics or guests for future seasons, we'd love to hear from you. You can email us at adaptthebuiltenvironment@gmail.com. Thanks for listening.